Have you ever wondered how proprietary traders actually trade? In this video, you'll find out. In it, one of our highly experienced professional traders breaks down his trading bar by bar, showing you how he comes up with the exact entries and exit points, stop loss levels, profit targets, and risk-reward ratios. He also discusses the market conditions that led him to take each trade, such as trend, support and resistance levels, and price action signals. You don't want to miss this video we produced for the trading community. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7- and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account.
Today we're going to do some bar by bar analysis, and we're going to go over a few trades from this past week. And typically this is something that I do when I'm mentoring new traders. A couple times a week we will hop in a Zoom and I'll share my screen and I'll just go over trades and give some insight into what I traded and my thought process behind these trades. And it's really helpful for me because number one, I'm reviewing my trades and answering questions with new traders. And number two, the new and developing traders get to hear my thought process as someone who's been trading full-time for 4 years. The first trade that I wanted to go into was NVIDIA from Tuesday, April 18th. And you could see that in the morning, NVIDIA was gapping up and it was kind of breaking this downtrend here, and we could draw that line. So I was interested in a potential breakout over the recent highs. So coming into the morning, NVIDIA, and this is the reason for this gap up that you see here, NVIDIA had a price target upgrade to $335 from HSBC. And as it was gapping up on low volume and kind of just climbing higher into the open, news came out that Microsoft was developing an AI chip, which is bad for NVIDIA. However, something that I realized pretty quickly was that Google had announced that they were developing an AI chip on the morning of the 5th, and it gapped down, and you could see that that gap was bought pretty quickly. So the news technically didn't really have a big impact. The gap was bought, and traders and investors brushed that news off. So I thought something similar could happen. So you could see that it tests this after hours high and it holds, dips a little bit below, and then reclaims and starts grinding up. So in here is where I got about a quarter of my size, risking the pre-market low, just on the fact that it held the after hours high from the 4th, and also just knowing that last time it had this kind of news, it was bought up. As we come out into the open, the market opens and we have a strong move, and it gets over the initial reaction high from the Microsoft news. So my thought there is anyone who is short based off of that Microsoft news, they're now in trouble and they're all wrong over this 277.60, which was the initial reaction where it started. And that's going to be an ad for me. So I'm adding, and now my risk for this trade is low of day. And you can see that it starts to consolidate. It wicks into VWAP, reclaims, and we're getting that consolidation. And then we break above the pre-market high and to new intraday highs on high volume. So we have the second highest volume bar of the morning at 9:36. And that's going to be my final ad. And now the trade has a stop at low of day, and really this is a momentum play for me. So you could see that it is holding the 9 EMA really well. After it makes that new high, dips into it, pushes higher, makes another new high, and I'm continuing to hold this trade. As it pushes into 280, which you could see on the daily chart to the left was that recent high, I'm starting to take profits into resistance on about half of the position. You could see it fails, but it holds the 9 EMA. So the trend is still strong. It makes another marginal new high and then fails. And we call that a failed follow through new high. And then it breaks the trend. And when that happens, I'm out of the remainder of the position. And you can see that it breaks that uptrend that started from that initial reaction low when that news came out. And we could draw that trend line. Another signal that tells me the trend might be over is when it starts holding below the 9 EMA, which we haven't seen all morning, which is another reason to exit for me. So just a momentum trade, and some of my favorite trades come from when I could recognize that there are shorts or longs that are completely off sides, which in this case, there was some news that was perceived as negative. We had a big down move, and now anyone who's short based off of that news, once it gets over that high, they're wrong, and they're gonna have to cover, and that creates a good momentum move. Another trade that I wanted to go over from that same day is Bed Bath & Beyond. Bed Bath & Beyond was due to report earnings on the 19th, which had passed, and you could see that 2 days before, we had a really strong move higher, and it's on big volume, which kind of gets me interested for a potential squeeze into the earnings report. And you can see that's the highest volume it's done in quite some time since the beginning of the year. And so that piques my interest, and now I'm watching it on the 18th for a second day play. So it gaps up on the 18th, and off the open, it's holding the gap, but it's not really trading clean. But again, I can tell that it's doing a ton of RVol, and during like the midday afternoon, I could see that it's on track to do similar volume from the prior day. So technically we have a follow through day on strong volume. It's holding above the prior close, which is bullish. So the prior close was 28 cents. We can mark that off. So holding well above the prior day's close and doing a decent job holding above the prior day's high. So all day it's holding that gap. And if we look at the 5-minute, you can see I drew this wedge on this day, and it's really just wedging and it's consolidating tightly all day. But it's having trouble at this 33 cents. See, every time it pops into 33 cents, it fails. And that's a little bit of a resistance area on the daily. You can see that failed here, failed here, failed here. The last 5 minutes of the day, if we zoom in on this 1 minute chart, it breaks over that 33 cents and volume starts coming in. And it's volume that we haven't seen. If we zoom out a little bit, we haven't seen volume like that since the first 5 minutes of the open. And that's very telling. So oftentimes momentum could come into the stock the last 10 minutes of the day. And really that's a time where big traders need to make their decisions before the after hours session. And we also have it breaking a key technical level. And we get that volume confirmation proving to us that it's a real move. So when it breaks over 33 cents, that's where we're going to buy it. And as it's making new highs above 34 cents, we're going to add, with the idea that it could squeeze after hours. And this is a trade that I held in the after hours, just watching it. It's holding up really nicely, well above intraday's highs. And I could just see that it did really great volume on this day. So I want to hold it. And then into the after hours, it starts curling up. It's doing a good job holding those EMAs. And as momentum comes into it, I'm selling this position. So again, all day, you have it holding over the prior day's close, hanging out at yesterday's high, and is really what it's doing all day is just consolidating its gains, and it's holding its gap. And you can see this nice wedge on the 5 minute, and once that breaks on volume, you want to buy that for momentum into the close and even hold it into the after hours for that short squeeze. And what you have here are shorts saying, hey, it doesn't belong up here. Earnings are the next day. They're going to file for Chapter 11. This company's going bankrupt. And now they're getting nervous and they're going to begin covering those shorts, and it gives you that nice little squeeze. And even if you have good prices and you took profits, you could hold that position into the next day with a stop at break even. And now we're going to go into day 3 of this trade, which is when they reported earnings. You could see this dip, and this is the next day of pre-market. You could see this dip, and at 9 o'clock, they announced a resumption of Chapter 11 preparations. And you could see it dips off that news, and then it holds up. It holds up, pops off the open, fails. It's holding below VWAP, which I'm sure is trapping some shorts. Pops up to VWAP, tries to hold VWAP, but fails. But really what it does, it ends up putting in a higher low. And then it reclaims VWAP. You can see that it trades up to 48 cents, which is the pre-market high, and fails. But then what I end up seeing is that it's doing a really good job, even though it failed from pre-market highs, it's doing a good job holding above the opening range and holding above VWAP. And you can see that it starts to form a little wedge here. As it begins to break above the highs, you see volume coming in at 11:30. And it's pretty decent volume for 11:30. It's comparable to the volume at 10 a.m. You can see that during this consolidation, after it failed from pre-market highs, the volume really thins out. And in my opinion, what happens here is you have some shorts getting involved because they're saying, hey, it fell from pre-market highs, and they're getting in thinking, this is going to break VWAP and fail. And what you end up having is just a low volume consolidation above VWAP, which is bullish, and above the opening range. It's holding above the prior day's close. It's holding above the opening print. So those are all checks in favor for me for a potential long. But what you really want to do is you don't want to get involved in this consolidation here. You want to wait for proof of that consolidation break and volume coming in and breaking above highs, so you can feel confident about the trade. Often what will happen is people will try to predict moves, especially new traders. They'll try to predict this breakout, and they'll end up getting in somewhere in here saying, hey, it held the bottom of my wedge, I'm going to get in here. And then as the trade develops, they start to get nervous. They start to say, hey, I think this should have broke out already. They start to lose their confidence in the trade. But if you just wait for that wedge to break, and that break above the intraday high and that volume coming in, that could get you really confident about the trade. And what it'll also do is give you a clear level to risk against. So in this case, once you get that break above the high, you could risk below this test of VWAP, which is ultimately the bottom of the wedge. So you end up buying here, it pulls back and holds 48 cents. And then once it makes a new high, you see that volume coming in there again. We get an even higher volume bar than when it broke 48. And then you just play the momentum. Pushes into 55 cents. You get a little bit of a wick there. So a little bit of a stuff move into 55 cents and it fails. So right there is a reason for me to take profits after a stuff. And that's a big move for a penny stock. And then we have a double top. And it breaks below this higher low here. And that's a signal for me to close the trade out. Anyone have any questions so far?
We've seen a lot of failed follow through in the market recently. When you had all these checks in favor around 11:30 and you entered above 48 cents and you see those two wicks, did you take off any of your position?
In here?
Yeah.
No, because it's doing a good job holding over that that high.
Yeah. Okay.
Yeah, and I know what you mean. Like when something breaks a key level, and we've talked about this before, you really want to see it explode. But as long as it's holding above that high, that's okay. And also something to keep in mind is that the best breakouts will happen the first hour of trade when there's a lot of liquidity and a lot of volume, and our vol's the highest. And I know that as we get later in the trading day, you're going to need to be more patient with the breakout trades. Even if you do get spooked out, when you see that test, that retest of 48 cents and that curl off of it, you could get back in.
I was waiting to see where you were talking about putting your stop. And for that trade, that seems like, so I'm trying to figure out, like, for a wedge break like this, if you're getting the volume, if you're not entering until you get confirmation of the breakout of the higher, the top end of the, like the high a day for like the top of that pattern there, if you're getting all this confirmation, why is it that like you're putting your stop all the way at the like first higher low of the wedge? Like, is that because this is a penny stock and you want to give it more room? Or like what, like would you do this same thing if you had this set up on like a mega cap or like a mid cap or something like that?
Yeah, so what I like to do is I like to leave my stops where I'm completely wrong on the idea. And don't get me wrong, you know, it's not that black and white. So if this were to get above 48 cents and it's stuffed really hard and had a hard failure, like back down to say like 45 cents, I'd probably take some size off.
So are you doing this so that you can get more size, like, and have time to react almost? Like, is this like, because I mean, I only trade with like pretty small amount of shares. I risk like $5 or $10 a trade when I'm trying to work out these patterns. You know what I mean? But like, is this something that you are doing because you have more size?
Well, for this setup, I know that it's been doing high volume the past 2 days. And I know that there's probably some shorts stuck in this, especially since they announced that they're planning on going through with the Chapter 11 or restarting it. And we had that dip in the morning and it reclaimed and it held up really well. So if my thesis is that there are shorts trapped in this and it could really squeeze, I want to give myself enough room for that trade to work. Like what I would hate to happen is if I get long above 48 cents and it fails and just ends up like retesting that wedge and then reclaiming. Like I don't want to get spooked out because of that. So ultimately what I like to do is I like to accept the risk to where I'm completely wrong on the idea. And as the trade develops, I could add. So personally, I didn't do this, but another way to trade this is, okay, well, now that it held and retested that 48 cents, that initial high day, and now that it's curling off of it, well, I have confirmation that the level held. So what I could do is add more and then adjust my stop to like below this breakout bar.
Okay, yeah, that was my next question, is at what point are you moving your stop because the trade's working for you?
Yeah, once that volume starts coming in and starts curling off the previous high, you're getting confirmation and the trade is working. So typically how I like to trade is once I get into a position, I have my stop where I'm completely wrong on the idea, and then I get confirmation on the idea and the trade starts working. I get momentum in my direction. Oftentimes I'm looking to adjust my stop. Say if I'm long, I'll look for a higher low to adjust my stop to.
Okay.
Yeah, so like what I'm never really doing, and this is something that I recommend if you're a developing trader or if you're not yet consistently profitable or you're just starting to be consistently profitable, once you get confirmation in your trade and it's working well, you never really want to turn that into a losing trade, especially if you're in from correct prices and you had good execution on the trade. Once the trade starts working, I'll look for an area to adjust my stop. Like I'm never going to let this go to 54 cents and then let it crash on me and it ends up being a loser at 45 cents.
So it's almost like you have different sell rules for if once the pattern begins to work for you.
Right. Oftentimes what I'm doing is I'm, as Carlton likes to say, ringing the register. So you're in a position, it's working, your execution was great. What's playing out is exactly what you thought would play out. You want to pay yourself a little bit. And that's not to say like take 50 or 60% of your position off as soon as it starts working. Typically what I'll do is I'll sell 5%. As it goes higher, sell another 5%. As it goes higher, sell another 5%. Just to have peace of mind that I'm locking some in. And not everyone will agree with that, but that's what works for me.
Sure. Okay, that clears up a lot. Thank you. I'm
Sure.
working on my sell rules right now. That's why I was asking about all this.
Do you mind if we go back to NVIDIA, Justin? You said you had 25% on, I believe you said a quarter of your size on pre-market.
Yeah.
And did you sell any of that before the market open?
No, I did not.
Okay. And then you said you were full size at the break of the first consolidation?
Yep, right in here.
Okay. So were you at market open when it broke above the 930 candle? Were you in, say, 75%?
No, so once it broke above this previous high here, I'm sorry, not previous high, this reaction where the news came in and it failed. So this like 277.50. My idea is that shorts are going to be caught off guard and they're going to have to cover their position. So this is where I'm getting up to like 75% of my size.
Okay.
And look, it doesn't go right away, but I'm prepared to take that risk down to low of day. And I'm patient with it, and it ends up consolidating. And what I really like is when like you get a consolidation and it wicks down into like the 9 EMA or VWAP and then pops right back up and starts holding up again.
Sure.
And then when you get that volume confirmation, that's an ad. So now I'm in full size in here. So I thought that this was a really interesting trade. Unfortunately, I missed it, but I think it's really worth reviewing. So everyone knows what happened with the regional banks. And you could see that Western Alliance, WAL, after it put in this bottom, is just kind of consolidating in a range between like 27.50 and 37. And they reported earnings. And it's gapping over this range. And it's gapping over this like 37.50, we'll call it. You can see that line here. And basically what they said on their earnings is that they have immediately available liquidity that exceeds uninsured deposits with a coverage ratio of 158%, gapping up on that. What's interesting to me is that off the open, it kind of ends up just holding below VWAP and it looks dead. Like it looks like it's going to end up fading this gap up. And what ends up happening is you could see it's trying to hold that top of the range. It's trying to hold that 37.70, 37.50 area. It's supporting, it's supporting, it's supporting, it's supporting, and then it fails. And like I said with NVIDIA, some of the best trades that you're going to take come from when you identify a side of the trade that is just completely wrong on their idea. So it gets the breakdown and you see volume coming in. So sure, there's longs hitting out, there are shorts hitting the bids. And once it reclaims that 37.70 and starts holding, you could bet that anyone that was playing for the breakdown, thinking that it's going to fade the gap up, they're starting to get nervous. So it holds that prior resistance becomes support again. It reclaims VWAP, starts holding above VWAP, which is a big change in character, right? And we haven't seen that. And they're getting on their conference call at this time. Gets over VWAP, pulls back and holds, starts holding above the 9 EMA and starts curling up. And I think that this is a really great long, risking to just that wick below VWAP here. So you're getting long anywhere in here, and your risk is going to be $38. You can see a nice squeeze starts to develop, and ideally you're taking profits into that with the idea that it's failing from high of day, which is fine, and you do want to take profits into high of day, but you want to give this trade a chance to really work and break over high of day. So what you would do is you'd be taking profits into here, and you would leave your stop at 38, or you would adjust it to break even and let the trade work. But again, I just wanted to highlight that some of the best trades come from when identifying the other side of the trade is completely wrong. And you have that reclaim of that prior resistance becomes support, reclaims the opening range, and then gets over VWAP for the first time all day, and then pulls back into VWAP, holds, and starts curling off of it while holding these EMAs. And for me, like this is a really clear long in here, and your stop is 38.
With the banking crisis and everything and this thing's gapping up, is this a conference call you might be listening to while you're trading it?
Yeah, it's generally a good idea to do that. And typically the most important part of the conference call is the Q&A, which takes place like the last 20 minutes or a half hour or so. So lastly, this LVS was interesting to me. It's gapping above 61 to new 52-week highs, gapping above this resistance here at $61, prior 52-week high. So really nice daily chart there. And if we zoom out to the weekly, you could actually see that it is breaking a much bigger downtrend as well. So on the weekly, it started consolidating above that downtrend. And now when we zoom in a little bit more, you can see it's breaking 52-week highs off of the earnings. So EPS was 28 cents versus a 17-cent estimate. Revenue came in at 2.12 billion versus a 1.82 billion estimate. And EBITDA surged to 792 million, up from 110 million in the same quarter last year. And really the big thing was they see normalization of activity at their main properties in Asia, which is a pretty big deal. Off the open, a valid trade setup is a dip into a pre-market or after-hour support area. So you can see that it does that. If we just look at this after-hour support area, it dips into there, reclaims, and puts in a new high. It breaks through the opening price, but it ends up failing at this resistance. So if you're taking that trade and you notice that, hey, it can't get over this 62.50 area, which was resistance all after hours and pre-market, and then it fails, you want to get out of that pretty quickly and then wait for it to set up again. But I'd just like it to be known for anyone listening that a setup that I love is when you get a earnings report after hours and it puts in a really clear support level, and then off the open or into the pre-market, it's continuing to hold that and it pushes higher. Off the open, what oftentimes happens is you have big money that has been in LVS and they want to take profits on this gap up, and they want to take profits when the liquidity is there for them. And you can see that the liquidity was definitely there for them. Had one of the highest volume days all year. You would get that dip into that after hours or pre-market support, and you get a move right back through the open. And that's typically a great momentum long and a great earnings day one setup, but you can see it fails. And if you get long this and it fails, what you don't want to do is you don't want to get discouraged and say, hey, that should have worked. You get angry, you got stopped out, and then you just move on to another ticker. Like that's a common mistake that new traders will make. But what you want to do is you want to wait for the next setup. And I thought this was really interesting that it double bottomed into 61, which was the prior 52-week high. It reclaims VWAP, which could be a buy. I want to get all my size here. And the stop is 61. You're definitely wrong below that double bottom. It ends up pulling back into that 61.50 area from after hours, holds, and then you get some consecutive green bars that curl up, which we really haven't seen all morning. And this would be where you're getting most of your size. As it makes new highs, you could ring that cash register on a piece of your position. And then what you really want to notice about this is how choppy it traded the first half hour, and then what it does from about 10:05 to about 10:30. It starts to trade clean, and it starts to hold up above VWAP really well. You're not getting those volatile moves anymore. So price is being accepted up here. And you can see that it breaks this consolidation, starts curling up, and this could be another ad for you. And then ideally, once it breaks this trend, or as it pushes up and then fails, you're scaling out of most of your position, and then you're leaving the rest with a stop at break even. And you're going to give this a chance to trend. Ultimately, you would be stopped out, but I think you could get in, you could get out before you get stopped out because of what we see here. You have a high, retest those highs, and fails. And then it makes another new high only by a few cents. And we call that a failed follow through new high. If a stock is going to be really strong, you don't want to see those failed follow through new highs. And that could often signal a shift in momentum or a change in trend. So if you think that a stock is going to be really strong and you think it's going to trend for the day, but you end up seeing it put in a high, tries to put in another high, maybe gets above that previous high by a few cents and fails, and then does it again, that's not good. You want to see momentum each new high, especially on a stock with a solid daily chart setup, weekly chart setup, strong earnings reports, all these checks in favor. You don't typically want to see failed follow through new highs.
If you have a failed new high, right? And
Right.
so like you're talking about how you had three of them here. At what point are you like, okay, I'm cutting this? Is that if it breaks the previous lower high at that point? Or I mean, the previous high or low after not making a new high? Or are you taking it off into like the third go if it can't seem to do something? Because the reason I'm asking about this is like I traded the stock and the tape was killing me on this thing. Like everything, like it was just super choppy. And like I didn't, like, do you remember the tape on this thing?
I agree. It was tough, especially off the open.
Yeah, it was so hard for me. Like I just was like, I made a little bit of money, but I didn't even know how to trade it because the RVOL was like 700 or something crazy like that. But like, I mean, 7 times, but like the tape wasn't ever moving. So like, how do you, I don't know. I'm trying to figure out how you had confidence in the setup. Like, were you just playing price action? Like,
No, it was really after this double bottom into 61, which held the previous 52-week high. Yeah. So after, I took this trade and I got stopped out on it. But after I saw this double bottom and I noticed how messy the tape was, this kind of became a trade for me where you enter and you put in your stop and you don't get too caught up in the tape. And really, like for earnings, any earnings, the tape is going to be moving really, really fast, but it's going to be hard to read. Any earnings play is going to be hard to read in the middle of the range. Any earnings tape is going to be hard to read in the middle of the range, but you really want to focus on it at key levels. So more so like focused on it at this 62.50. And then as it's like, what you want to see is after it puts in this high, it fails. You're taking sales because it's breaking that trend. Mm-hmm. And then you really want to pay attention to the tape as it comes back to that new high. Are offers going to start to lift? And are you going to see that time in sales flood with those green prints from people hitting the offer and they want to get in at the new high? Or are you going to see the tape completely die and stall out, which in this case is what happens. Like it pokes that high and then it's dead. And like you don't really want to see that. On a good earnings trade where you're going to see multiple higher lows and higher highs, you want to see momentum through those highs. And you could see like it put in like a little double bottom here at 63 and then traded back up. Like you want to see this breakout. You want to see the offers lift. You want to see the velocity on the time in sales. You want to see that speed up. You want to see those green prints come through. And you watch it as it comes into this high and like none of those things are happening and it kind of like starts failing and the tape is dead. Like that's a sign, like that's when I'm really paying attention to the tape and recognizing that and taking sales as that happens. All right, and we'll end with that. So this was our first go around of bar by bar review.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, Our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we've found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.